Are you freaking out? Don't freak out. Everything's going to be just fine. This is the perfect time to do our weekly Friday Bitcoin Macro War Room because my entire timeline right now is melting down over us. I think we just hit 114K like flat this morning. And overnight, the price has just been dropping like a rock. Everyone's screaming their heads off as to why it's going down. So let me hopefully calm some nerves. And let's get into the data this week because it was definitely interesting. But actually, before we do that, we're going to look at the liquidity regime tracker. Taking a look at this, I guess the most concerning thing right off the bat, which is something I've been posting on recently, is that we have officially, in my mind, decoupled from the global liquidity chart that has been everyone's favorite since the beginning of the year, where this correlation has been super tight. It no longer is. I mean, we have clearly broken here. This is probably the biggest decorrelation since the start of the year. I've looked at all these other gaps and nothing even really comes close besides maybe this one in February where global liquidity was really down and Bitcoin was still meandering around 100K. We ended up catching up and correlating back again. Are we in the same type of area here where we're going to have a violent reversal? Only time will tell. At this point, you can see on the top here, 62% we have dropped to in terms of a 30-day correlation. The 90 and 365-day correlation is still above 80%, but this used to be in the 80s. So we've dropped 20%. The air gap has increased to 25%. Something's definitely broken here unless we're proven otherwise in the very short term with a violent price reversal. So we'll see. Also, my macro overlay score down here on the bottom has dropped now out of this zone, basically due to this latest drop in liquidity that you can see up here. So this is the forward looking. We have come off the highs. We've dropped back down to the yellow line, which is really interesting considering this is my risk on, risk off regime flip. So if we actually cross the yellow line and close there, this liquidity regime would be risk off. That didn't actually happen. We bounced perfectly off of it, but we'll see if this sort of downtrend continues. Again, this is a lagged correlation. So this is where we should be in the future. But given how far we have deviated, it definitely is concerning in terms of what is actually driving Bitcoin price today, currently, if it's not global M2. So that's the question we'll be trying to answer. But let's get into some of the data this week because it was definitely an interesting week. It was definitely a mixed bag, some negative, some positive. We'll start off, there were so many releases that I'm actually just going to filter this by the red folders instead of including the orange. We'll start off with job openings. This came in weaker than expected, which basically just means that there's a cooling labor market and a softening economy. This is good for having the Fed potentially cut rates, right? It means less tightening, or they should be tightening less. Of course, the big news this week was the FOMC statement and the federal funds rate. As you can see here, Powell did not cut. There was a 98% chance of him not cutting. So not really a surprise there. The story behind this now is that as of this morning, odds for a September cut have jumped significantly. And we'll take a look at that next. Let me actually move my camera so you can see some of the lower numbers here. But ADP non-farm payroll employment change, this tracks private sector job gains before the sort of official NFP number hits. And, the tiny forecast of 77K got sort of blown out, and Bitcoin doesn't really care unless jobs sort of collapse. So to me, this was a nothing burger. Advanced GDP came in 5% above the forecast. So this measures economic growth, and 3% means we're growing and we're growing fast. The downside here is that it gives the Fed excuses to not cut, right? Because there is a strong economy. The federal funds rate we already talked about. Core PCE price index came in line with expectations. So nothing really changed there. Employment cost index doesn't really matter to me. It just means that, it being flat means that wages are sticky. So another reason for the Fed to sort of stay frozen. For unemployment claims, don't really care about this either. It's basically just a real-time health check unemployment. Labor isn't really cracking given this number. So don't expect the Fed bailout if people still have jobs. No panic here basically means no pivot. The most important print, I don't care about hourly earnings or this one. Unemployment rate stayed the same, so nothing to talk about there. Most important print and the most disappointing, honestly, which is another reason why my macro overlay has dipped so hard down today, is because ISM PMI came in well below the forecast. So the forecast was an increase from 49 to 49.5, and we got a 48 print. Anything under 50 is still technically contraction. You can see how it looks sort of over time. But for this cycle to really get super giga bullish, you need the ISM to be trending up to like above 50, towards 55, towards 60. This is generally where the cycles peak. I mean, we are still in like a frozen winter when it comes to the ISM, and a 48 print was really, I did not expect that. I expected it to be higher. So I was definitely surprised this morning when I saw this come in. It's basically a leading recession indicator. The other thing is that manufacturing came in at 48 while GDP came in at 3%. So beat by 0.5%. This divergence is sort of a red flag, in my opinion. So it could still be positive. You could expect liquidity rotation towards hard assets like Bitcoin. Again, once this sort of gets priced in, the cracks are kind of widening, right, between GDP and where we are in the ISM cycle. This is now confirmed the longest amount of time that the ISM has spent sub 50 ever since they started recording this. So kind of insane. The numbers are what the numbers are. You got to look at all of this data through a lens of remove all your biases, and this is what the data is. So we'll move on now. So I think the most interesting thing here, and I'll refresh this because I think the number's updated, but wow, okay, it went even higher. So I think last week, this was at about 40 or 50%, maybe a little bit higher, maybe 60% for them to cut in September. And now the numbers are at 80% of a cut in September. So it's, to me, as time goes on, this will just go higher, and the odds of a September cut are locked in at this point. So this is huge. Let's see what happened for October. Again, this went up severely. So this means a second cut in October. And then for December, wow, 50% chance of, we're down 100 basis points. So these numbers have gone up. The probabilities for this, my favorite little chart here, has definitely increased severely with these numbers that have just come out, which puts us at, for January 2026, we could be at 3.25 to 3.5% for the federal funds rate easy. So the heat is on for Mr. Powell and for the Fed. And I think one thing that people definitely miss is, all the heat goes on Jerome Powell, but it's not just his decision. As I understand it, it is a committee. I think there's 10 or 12 Fed board members across the United States in different regions. They all vote whether or not to lower the rate. It's not like Jay Powell just comes in and says, lower the rate. I think he has the sort of authority to maybe do that and override everybody, but the committee basically votes. And I think this time around this week, there was 2 dissenters. So 2 people did say we should be lowering rates while the rest stayed where they were. So take that for what you will. But let's look at my actual system and see if anything has changed. Spoiler alert, nothing has changed. Literally nothing. Again, this is a super slow moving system. That's the entire point. I'm trying to capture the full bull or bear market with this. It is not a trading vehicle. This is just for understanding if we should be in the market and long or not in the market or short. I don't really short, so I just hold cash during those times. But again, nothing has changed here. The liquidity and regime tracker is still above 50, but we're not trending up, which is why this has a score of 0.5. Everything else has stayed the same. We'll take a look at the crypto quant dashboard. Stop talking to me about your ads. I don't care. So again, IFP is still negative and has been negative since 82K, which is still crazy to me. Bull bear market cycle indicator, still bullish, has not changed. MVRV, Z-score, bull bear market, again, still bullish. Nothing has changed here. Sharp ratio has come off a little bit, which is nice. Adjusted Newpol is still in the yellow, which is totally fine. MVRV still in the midline. Nothing really has changed here. I guess the only interesting thing to note is that long-term holders did start selling here, sort of a little bit of a dip, while retail started buying. As is always the case, retail is buying the tops. LTSTH, SOPR ratio has cooled off significantly, which is a good sign if we expect continued positive price action. You can see retail investor volume here has ticked up, but has come off slightly now that obviously we've hit sort of lower prices and are back down at 114K. Realized price short-term holders, again, still bullish, still green, which is good. I don't think anything else here was really, I would be surprised if the smart DCA, actually, sorry, correction. I would not be surprised if the smart DCA signaled here soon. If you probably update this right now, I can't run it myself, but let's see if actually we open in a new window, maybe it'll update. No, it hasn't. It hasn't. I mean, this has been run a little bit, it seems, earlier, but yeah, this hasn't been updated. Basically, this signals when Bitcoin price goes under the blue line. So it's generally a great time to add. If you're in a bull market, I wouldn't be surprised if this actually hits. I mean, technically 115.57, we did hit that this morning. So if this was a real-time indicator, it would be telling you this is not a bad time to add more. If your thesis is that we are going much higher, much later into the year. So that basically covers all of the sort of on-chain metrics that I look at. Again, it's going to be very interesting to see what actually plays out here with the global M2 gap that we're currently in. As you can see, we have definitely peaked currently, which is September 22nd, September 23rd. And we have come off from that peak quite a bit. So if we actually see what that percentage was, so 15% off the top in terms of global liquidity. So it's going to be interesting. I'm definitely still bullish into the end of the year. I think that pretty much covers everything for this week. Hopefully this analysis helped calm your nerves a little bit. This is nothing to freak out about. Bitcoin is not up only. If you are not ready for the volatility and the downside, then you're definitely not ready for the asymmetric upside. This works both ways. It doesn't just number go up all the time. That is why this is one of the hardest assets to be invested in, and also why a lot of people shy away from it, because they just cannot handle the insane volatility and swings. If this helped you cool off at least a little bit and really think about how you feel about Bitcoin long term and how you should be positioned, I really hope it helped you at least even a little bit. If you did enjoy this video, you know the deal already. I'm not even going to ask you for it, but just know that I really appreciate you sticking it out with me, watching this till the end, and I'll see you next week on Friday. As always, have a great weekend.